be looking at analyzing the forex market without at all using the indicators. Okay. Now, if you have any question, regarding to the forex market, I would really encourage you to comment. So, oh, welcome back. Sorry for that technical glitches. Now, you are talking about basically you are talking about price action, and I was telling you that if you are out there and you are tired of using indicators because the indicators are lagging, today this session is perfectly suit for you. So, whether you are a beginner or you are advanced forex trader, this is a perfect trading session for you to introduce you to the world of price action, whereby this this trading about price action is basically trading without using any indicators in the forex market. Now, if you are very new in the forex market, we know that we have three ways of analyzing the forex market. We have the technical analysis, sentimental analysis, and the fundamental analysis. Now, technical analysis is what we call study of the charts, whereby in these major economies such as the US, or European countries, there are various news and economic data released each and every day that affect the currencies that you'll be trading either positively or negatively. Now, if you are trading the forex market using now the fundamental analysis, you'll be basically be trading the news, and for you, you'll be anticipating to take that you'll be anticipating to take that advantage of that sudden price fluctuation. Now, on the other hand, now we have this other way of trading the forex market, which we call technical analysis. And technical analysis basically is trading the chart, basically looking at the chart and predicting the future price direction. And for trader that is analyzing the market using technical analysis, he can employ a wide range of trading strategies, such as using indicators, support, resistance, trend lines, chart patterns, candlestick patterns. All those are different ways of analyzing the forex market. Now, for today's class is very specific. We're basically talking about price action. Now, I'm sure you are super excited to understand, or you are there, you're wondering, what is this price action that I'm talking about? Now, this price action is a method of trading that this price action is actually a method of trading that relies on raw data on the forex market. Basically, what I mean by that is that is a method of trading that basically will be looking at the chart without using any indicators. So that now you can go to predict the future price direction. Okay. Now, for traders that analyze market using this price action, they are basically looking at this forex chart. If maybe they are using like the MetaTrader 4 or those trading platforms, MetaTrader 4, MetaTrader 5, the C Trader or the Trading View, they be basically looking at that forex chart, and then now they'll be able to predict future price direction without necessarily looking at indicators. Okay. Now, why should you as a forex trader, why should you embrace price action over maybe using indicators as your chart? I'm sure if you are very new in the forex trading, you have all heard about indicators. And indicators, they are tools that help us analyze the forex market by providing us with trading signals. And usually, most people when they are very new in the forex market, they usually like trading with indicators. Okay, whereby maybe if you are very new, maybe you have encountered moving indicators such as the RSI, the Bollinger Bands, the stochastics, the moving average. Those are the indicators. And usually, most people that when somebody is relatively very new in the forex market, they most probably embrace the indicators to analyze the forex market. Now, I'm not saying that using indicators is bad at all, at all, at all. What I'm saying is that we have another way of analyzing the forex market, which we call the price action. And basically, I wanted us to look at why should you consider like price action over using indicators. Now, one of the reasons why you should embrace like this price action over any other method of analyzing the forex market using the indicators is because price action it allows traders to make real-time trading decisions based on the market data alone. Now, what do I mean by that? For trader that is analyzing the market using that price action, he will basically be looking at that chart itself, and then now he can be able to see repetitive price action, and then he is able to make trading decision whether to take a buy trade or whether to take a sell trade. Okay. Now, another reason why it's important for you as a forex trader to embrace price action over using indicators is because by using the price action basically reflects the psychology of the market participant. Basically, Price action, it reflects the psychology of the buyers and the sellers. You see, in the forex market, the buyers and the sellers are always fighting for control. And whoever wins between the buyers and the sellers will dictate the future price direction. Now, by now trading the market using the price action, you are basically able to see the psychology of the buyers and the sellers. Okay. Now, another reason why I would encourage you to embrace like price action over using indicators, because by using the price action, you eliminate the lag that comes about by using the indicators. Now, what happens is that most of the time indicators are usually lagging. By what I mean by lagging is that by the time that indicator is generating for you that signal for buy, to take a buy trade or to take a sell trade, price will have significantly moved. Okay. Now, if there is another way of analyzing the forex market in which you don't necessarily need to depend on the indicators, basically, if there is another way of analyzing the forex market whereby you are able to generate those signals for yourself for buy trade or for sell trade without using indicators. You see, that one is way better. See now, because you don't want to buy, maybe if this is what I mean, if maybe I was using the price action, maybe I could have taken my buy trade at price 20. Okay. But now for someone that is using indicator, you find that by the time that indicator is generating for him, maybe that buy trade, price will have moved like price 30. Okay. Now you see, if I can show you a different way of analyzing the forex market, whereby you don't necessarily need to be taking a trade when price has significantly moved. You see, it's already good for you as a forex trader. Okay. Now another reason why I'm insisting on this price action is that using the price action you can go to trade on any time frame. That's one another thing. That's one of the big things about trading the market using price action. You see, in the forex market, price is usually practical. Like what is happening on a higher time frame is most probably what is happening on lower time frame. Like if you look at the chart on the daily time frame and you look at the chart on the 4 hour time frame, you look at the chart on the 1 hour time frame, or you look at the chart on the 1 minute time frame, you'll be seeing the same thing. You'll be seeing those candlesticks, you'll be seeing those repetitive levels. Now, using the price action, you can be able to analyze the forex market using all time frames. You are not just limited to like specific time frames. Okay. Lastly, using the price action, you are able to follow the trend easily. Now, one of the things that we'll be covering about the price action is that price action it helps you to trade in line with the trend, as well as it also helps you to counter trend. Now, using indicators, they might limit you to only maybe trading on the trend, because there are some indicators that they only work best using when the market is trending. When the market is maybe ranging, they cannot be able to generate good signals. At that particular time, usually what happens is that you find that those traders that are maybe using indicators, if that indicator is for trending market only, when you go to use it when the market is ranging, you'll be experiencing series of losses. And you see now, if I can show you another way of trading the forex market without necessarily depending on those indicators, you see now that's very good for you. Now, if you have any question in regards to the forex market, kindly comment there. I'll be able to answer all the questions. Now, let us look at another interesting topic about this price action trading. Now, what are some of the most important features of price action? Important features of price action. Now, what do I mean that? What are some of the most important features of price action? When you hear somebody say that, I'm basically trading the market. I basically use price action as my way of analyzing the forex market. What does that forex trader usually mean? Okay. Now, the first meaning of the first important feature of price action is that maybe now the first feature about using price action is that when you're using price action, basically you are not in any way using indicators. So one of the most important features about using price action is that no indicators are needed. No indicators needed. Basically, you'll be looking at that forex chart, and then now you'll be able to predict the future price direction by looking at the most repetitive patterns in the forex market. Now, another key feature about now using the price action is that you'll be using candlesticks only. You'll be you'll be more interested in candlestick patterns because remember, we are not using indicators at all to analyze the forex market. So when another important feature about using about price action is that you are basically using the candlestick to be able to predict the future direction. You see, candlesticks are usually the most visual representation of the market. And using the candlestick, you can be able to derive a lot of information. Now, for a trader that is analyzing the market using price action, the first thing is that he doesn't use indicators. Secondly, he'll be more focused on trading the market using the candlestick. Okay. The third reason why the third feature of price action is that in contextual reading, basically, price action, it helps you to identify the trend. Now, another key feature about the price action is that you can, using the price action, basically looking at those naked charts, you can be able to know the trend. Basically, you can be able to know, is the market bullish, is the market bearish, or is the market ranging. Now, that's another very interesting feature about basically trading the market using price action. Now, the other key feature about the price action is that volatility. Now, using the price action, you can be able to basically when you're using the price action, like when you're using the candlesticks, you can be able to determine the volatility of the market. Basically, like if I'm trading using the price action and maybe I'm looking at the candlesticks only, by maybe looking at the size of the candlestick, maybe if that candlestick, if I can be able to see like big candlestick that are consecutively following each other, I can be able to know the market is volatile. Okay. Now, all these things you cannot be able to do when you're using indicators. Okay. Now, I'm sure that we are going to also to talk about some of the strategies that you can use using the price action, but at least you have already have a brief idea of what price action entails. One of the things that it entails is that you don't use indicators. Secondly, you'll be using the candlesticks you'll be using the candlestick for your analysis. The third thing about the using price action is that you'll be able to identify the trends easily. The third thing is that using the price action, you'll be able to know the volatility of the market. You also be able to know when is the best time maybe to buy or to sell, basically by looking at the candlestick patterns. Are you okay up to that particular point? If you have any question, kindly comment there so that I'll be able to answer. Let me check some of the questions that you have. Okay. Let us continue. Now, since we are basically introducing you to trading the forex market using price action only. Now, what are some of the things that price action entails? Must-haves for price action. Must-haves for price action. Okay. Now, what I mean by must-have for price action is that for a trader that is really interested in trading the market using price action, what are some of the things that he must have already mastered? You see, it's always good to, you can never invest in something that you are not, you can never invest in something that you have no knowledge about. Likewise now, if you're using a certain trading strategy, you can never go and start second guessing the strategy, yet it has its own conditions for entries and exit. Likewise, now, if you are using price action, what are some of the things that you as a trader must have mastered? One of the key topics you as a trader must have mastered using one of the key topics for you as a trader you must have mastered is support and resistance. Now, if you want to trade the forex market using price action, you must be able to know about support and resistance. Basically, this support and resistance, these are areas whereby we have major turning points in the market. Okay, and for traders that are trading the market using support and resistance, they are basically looking at those areas whereby the market has been having repetitive turning points, and then now they can be able now to predict the future price direction. Okay. Now, another key knowledge that you as a forex trader, if you want to trade the market using price action, you must be able to know is trend lines. I'm sure I'm going to dive deeper into this these trading strategies in details in our next videos. But now, if you want to understand price action, you must also be able to know or understand about price action. You must have practiced enough and understand what does first of all, what does trend line mean? Also, how do you, as a forex trader, how are you able to write those key levels of support, resistance, or trend line? You see, these trend lines, these are these are these trend lines, these are lines that show the prevailing direction of the market. Like if the market is bullish, let me maybe show you a very simple example. If the market is if the market is bullish, the market doesn't move in a straight line. So the market moves in a wave. It moves, it makes an impulsive move, it retraces, makes another impulsive move. But in the long run, you can be able to say the market has been going upwards. Now, if you want to master price action, you must be able to draw those trend lines. Basically, if the market is like bullish, you must be able to know where to draw that upward trend line. Or if the market is bearish like this, you must be able to know where to draw these lines. Okay. Now, the best thing about us is that from time to time we'll be covering all these topics. So, with time, it will be easier for you to understand these topics in details. Now, another key topic that you as a forex trader should be able to know or should have mastered so that you can be able to use price action easily and effectively is that you must have knowledge of candlestick patterns. Okay. Now we have said that candlestick is the visual representation of the forex market. It's a visual representation of prices. And for traders that if you want to understand price actions in details, you must be able at least to be able to identify the most repetitive candlestick pattern. Like you must be able to identify like a bullish engulfing, bearish engulfing, bullish pin bar, bearish pin bar, the morning stars, and the evening stars. You see, once you're able now to identify those candlestick patterns, they come in handy when you're using even maybe when you're using like strategies such as support, resistance, these trend lines. Okay. Now another thing you should note about the other thing that you must have when you are trading the market using price action is that you must be able to understand true breakouts. Now, if you want to understand price action, you must also be able to know when does the market when the market is maybe in an area of support or resistance, is it always guaranteed that the market will reverse? You see what happens is that in a forex market, just because maybe the market is in an area of support, resistance, or trend line, it is not always guaranteed that the market will reverse. Okay. Now you must be able now to identify when the market fails to reverse and it breaks that area of support, resistance, or trend line. You see, this knowledge is very important because you also don't want to trade when you're having those fake breakouts. Because sometimes what happens is that the market might be maybe in an area of support, resistance, or trend line, and then it makes a breakout. But that breakout is a fake out. Basically, that breakout, come at some market was in an area of support like this, whether the market just made a small breakout and then it went backwards. Now as a trader, if you want to master this transaction, you must also be able to know when does the market truly have a breakout. Okay. Also, as a trader, you must also be able to understand when you have false breakout. You must be able to understand when you have false breakouts. At what particular time, when you see the market has broken maybe an area of support, an area of resistance, or trending, at what particular time do you know that this was a fake breakout? You see, what I'm trying to build here is that I want to show you step by step of how you can be able to understand price action, so that now when we be coming to look at these specific topics, it will be easier for you to be able to understand. Like look at it this way. Now, if maybe you have knowledge of support, you have knowledge of resistance, you have knowledge of trend lines, you have knowledge of candlesticks, you see, it will be easier even for you when you be talking about more details about price action, it will be easier for you to be able to understand. Now another key thing that you must have for price action is that you must be able to know trend reversals. Now, if you want to understand price action, you must also be able to know at what particular time that the trend change. At what particular time that the trend change from a bullish trend to a bearish trend, or at what particular time does the trend change from a bearish trend to a bullish trend. Like, let me give like a very good example. Assuming you have come and you have looked at the chart, and then now you have been able to see the market has been bullish, and then you see that the market has been able to has changed from a bullish trend to a bearish trend. At what particular time, when you talk about trend reversal, is that if you're taking maybe a trend, maybe at this particular low point, and the price has been going upward, at what point were you supposed to have? At what point were you supposed to have exited that trade? So that now, when the market changed from maybe a bullish trend to a bearish trend, you have already exited that particular trade. Okay. Now, to understand this price action, you must be able to know about trend reversals. At what particular time do you know that it's about time now to exit my buy trade because the trend has changed from a bullish trend to a bearish trend? Or at what particular time should I be able now to understand or to exit my trade because the trend has changed from a bearish trend to a bullish trend? Okay. Now, the last thing, 1, 2, 3, 4, 5, 6, 7. Now, if you want to understand more about price action, the last thing that you need to know is that you also need to understand about price action conference. Now, most of our students they usually know that anytime all the strategies that you have been teaching them, or all our students usually know that you are not supposed to take a trade with only one reason. You must be able to have multiple reasons for taking that particular trade. Now for you to be able now to trade forex market effectively, you must also be able to have more than one reason for you're taking a particular trade. Usually, most of the people usually use like key levels as their conference. They can also use chart patterns. They can use candlestick as their conference. Also, they can use maybe something as simple as in line with the trend. Now, it's always good as a trader to have multiple reasons for taking a particular trade, and those reasons might those reasons must they must align with each other. Let me give like a very good example. Assuming I've come and seen that the market is bullish like this, and then maybe where the market is coming back to retrace, this was the previous area of resistance. Okay. Now, for me to be able to take this particular trade, maybe I'm anticipating to take a buy trade. I must have several reasons why I'm taking that particular trade. Maybe the reason maybe I'm taking that trade because it's an area of support. Maybe the second reason maybe I can take is that the market has been bullish. Maybe I've seen a candlestick pattern. Maybe at that particular level that I want to take that particular trade, I've been able to see different chart patterns. Now, for you to be able to have very easy time understanding this price action, first, we said know about support resistance, know about the trend lines, understand about the candlestick, or basically know the most repetitive candlestick pattern. Also, understand when you have a trade breakout or when the market breaks an area of support resistance or trend line, or when the market is having a forced breakout. Lastly, have have knowledge about trend reversals as well as have knowledge about conferences. All these will help you basically to trade the forex market without necessarily needing the need of indicators. Now, when I was starting out as a forex trader, my chart basically used to look like I was an engineer, like I was an engineer. Basically, when you looked at my chart, ungepata nimeweka support, nimeweka all indicators, nimeweka Bollinger Bands, nimeweka moving averages, nimeweka hizo akina RSI, nimeweka hizo stochastic. And what used to happen is that at some point in my trading, I got what we call analysis paralysis. Analysis paralysis is whereby you have so much information about maybe using so many indicators so that when it comes down to analyzing the forex market, you are totally unable to predict the future price direction. And one of the things that I did as a forex trader is that I decided that now I have to do away with indicators, and I want to trade the forex market using those clear charts. Basically, ukija ukiangalia like my chart, basically utapata it just having candlestick peke yake, and using the moment I did away with the moment I did away with the indicators, that's when even I also started seeing the market becoming more predictable. And if you're out there and maybe maybe you have been struggling with consistency, okay, one of the easiest you can go to do is that you can reduce the number of strategies that you have, and you can also do away with indicators. Now, when you do away with indicators, you are able to see the prices very clearly. When you have done away with the indicators, you're able to see the future price direction easily. If it is key levels, you are able to see those key levels easily. Now, how can I be able to trade using price action? That's now I want to show you step by step approach to trading price actions. Also, I want to answer some of the questions that you have. Since now you have already known that price action is basically is a method of trading the forex market without using indicators. We have also looked at why it is important for you as a forex trader to do away with those indicators. The third thing that we have looked at is some of the most important features of price action. What does basically price action entails? Now, right now, I wanted us to look at step-by-step approach to how to trade price action. How can you be able to trade price action? Okay. Do you have any questions that I can be able to answer? Okay, Ashley is saying, kindly talk about best entry points when using the strategy. Actually, that's what we'll be covering right now. How can you be able to trade using price action? Now, the first step, if you want to trade now using the price action effectively, the first step is that you need to identify the market structure. Now, this is the first step. This is the first step. If you want to trade using price action, you also need to understand about market structure. Basically, market structure is basically what do you usually look for so that you can go to know the market is bullish, bearish, or ranging. Okay, like if the market is bullish, in a bullish market, the market structure for a bullish market is that the market usually makes series of higher highs and higher lows. Okay, now this one is just but an example of market structure using uh, this one is just but an example of using market structure. Okay, now you need to identify the market structure. Like in a bullish market structure, you need to be able to identify this series of higher highs and higher lows. If the market is bearish, you need to identify those series of lower lows and lower highs. This is lower low, lower high, lower low, lower high, lower lows, lower high. These ones, this market structure is one that helps you to be able now to know the first thing. Oh, sorry. The first step about understanding the market structure is that you need to identify. You need about understanding price action is that you need to identify market structure. Basically, you need to identify is the market bullish, bearish, or is it ranging? Okay. Now, the second thing that if you want to master this price action, the second step that you need to have is that you need to identify key levels. Ama, you need to mark key levels. Now, this is the second step for how to trade using price actions. You need to plot the most important areas of support, most important areas of resistance, or most important areas of trend line. Okay. Okay. Now, the best thing about using support and resistance, basically, you'll be looking at those repetitive patterns. Maybe an area of support. You say that support is a price level where the market has difficulty falling. Basically, support acts as a floor, resistance acts as a ceiling. Now, you need to be able to identify those areas of support and resistance. The first thing I say that go into the chart, look at the market structure. Is the market bullish? Is the market bearish? Or is the market ranging? Step number 2 is that go to the market again and identify key levels. Basically, these are levels whereby the market has had maybe difficulty falling or rising. Or this key level basically they act as areas of support and resistance. Now, the other thing that you need to look for so that you can do now to trade price action is that you need to look for price action signals. You need to look at price action signals. Basically, after you have identified these key levels, you need also to be able to identify at what particular time will you be able to execute your trades. Okay, you can use some of the price action signals. You can use something as simple as candlestick patterns. You can use something as simple candlestick patterns such as those bullish engulfing, bearish engulfing. Also, you can use for the price action signals. You can use chart patterns. Basically, those ones they help you to be able to identify the market easily after you have identified the key levels.